Wednesday, April 5th, 2017, Monaco 64, home of alternative economics and contrarian views. This is like a post-US market update. The markets are closed. I usually don't do a post-market update. Excuse me. I usually do an early market update the following day before the US opens. But I think it's... the market move today in stocks, S&P and Dow, and also in the precious metals was very interesting. And I'm not I'm not saying we're going to see a collapse from now, that this is a turning point, but it could be some kind of turning point. We did have some news out of the Fed today. FOMC minutes come out, and some of the Fed members, Fed presidents, were warning that they think the stock market is overvalued or in bubble territory. They said they're thinking of, unwinding some of the Fed's balance sheet, which is over $4.5 trillion, and they would do that by selling the longer end, treasuries and mortgage-backed securities. So a lot of analysts are saying this is the reason why the markets turned around. And how did the markets turn around? Well, the Dow was up almost 200 points for the day, earlier in the day. It got up to like almost 20,900. It was 20,887, and it finished the day down 41 points. So almost 250 point turnaround. So technically that wasn't very good at all. Same thing with the S&P. Was up almost 20 points, and it finished down 7 points, down 1/3%. Gold and silver, on the other hand, did the opposite. Earlier on, we had some good numbers, employment numbers, ADP numbers were a lot better than expected. Gold traded down to 1243. Silver traded down to 1814. But then it turned around at the end of the day, just like stocks turned around, but the other way. And gold actually finished almost near the highs of 1257. They closed around 1256, around 6 p.m. New York. So pretty much unchanged. Silver closed 1832, so pretty good close up, but also pretty much unchanged from the previous day. And am I saying there's going to be something significant happening? Not really, but I'm just trying to warn that we could be starting to see a little bit of a, how can I say, fractures in the system. And, doesn't mean to say because the Fed is warning about overvaluation of the stock market that the stock markets are going to go down, because, if any of you remember Alan Greenspan, and I remember it well, back in '96, I was in the markets, made a famous speech about the market, warning the markets not to become irrationally exuberant. At that time, you had the stock market going up well, you had the dot-com boom, and that was 1996. Not too sure exactly what the reaction was. I think later on in Tokyo, the following morning, stocks dropped a lot. But if you remember, the stock market continued to go up and make new all-time highs over the next 4 years until 2000, 2001. So this warning by the Fed today doesn't mean that we're going to see a crash, but it could be that, you never know. And the other thing that's quite interesting that could put the cat amongst the pigeons is the meeting between President Trump and President Xi Jinping of China. They're starting their meeting tomorrow, Thursday, and Friday down in Florida, Palm Beach. And some people are concerned that there might be acrimony, that Trump and President Xi might not agree. Trump is concerned about trade deficits. Xi Jinping probably doesn't want to, start anything, how can I say, confrontational with Trump. Reading reports here, it says he might help get money invested in the U.S. But as I made a video a few days ago, and I put it up in the information in the cards, in my opinion, the only way to solve the problem of trade deficits or trade imbalances throughout the world, because the U.S. has a big trade deficit, but a lot of countries have big trade surpluses. My opinion, as I said in the previous video, is that you need a monetary system based on a currency that has a neutral the currency that's neutral, the currency that's not political, a currency that has had a track record for a few thousand years, and that's gold. Until you get that, a gold standard or a system, trading system, based on gold, you're going to continue to have countries cheating or manipulating their currencies. China is not the only country that manipulates its currency. The U.S. manipulates its currency to the upside, and that's why it has such a big trade deficit. The U.S. dollar is overvalued. The British have been manipulating their currency lower, and it's not just for Brexit. They're printing a lot of money, doing a lot of QE, because we still have a huge debt load in the UK. So it's not only China that manipulates currency. It's there's no rules. The currency system is not doesn't have an anchor, and it needs an anchor. So personally, I don't think longer term, unless they come out on Friday, Trump and Xi Jinping, and say we've decided to start a new gold-backed monetary system. We're going to fix our currencies. We're going to reset the price of gold. Unless they say that, we're going to continue to see trade imbalances. But, there could be a little bit of uncertainty in the financial markets because of this meeting. And plus, we have non-farm payroll on Friday as well. I just wanted to come out and, say that it could be an interesting next few days for the stock market, for precious metals. Looking at the technicals here, and you can bring up a couple of charts here. First, you look at gold. It looks like, there's a battle here at this 1260 area. We've tried in the last, couple of weeks to get back above 1260, and it's failed. Yesterday we got up above it, came down, and today we dumped, 1243, but then we closed the day really strongly here. So maybe it's going to be third time lucky. Gold will get through 260. We'll have to see. I think if it does happen, it could be in the next couple of days. Silver, the same kind of scenario here. As you can see, looks like they're, 1840, 1850. That's the line in the sand. So that's the levels we need to watch for silver. And the other thing I like to talk that we need to watch is the dollar versus the yen, because that's the main carry trade pair. And by carry trade, I mean historically in the last 15, 20 years, a lot of speculators borrow in yen to buy assets, to speculate. And why do they borrow in yen? Well, because the yen has been kept, relatively weak by the Japanese authorities. And interest rates in Japan have been next to zero for 15 years or more. So, you know, you can borrow a currency for zero, and that currency stays low relative to dollars or other currencies. So you can borrow in that currency and not have the risk that that currency is going to go up, and then you have to pay the loan back and you lose on that and you don't make enough on your speculation. So right now the yen seems to be strengthening. We're testing the dollar is weakening, and we're testing this 110 level in the dollar yen. So that's another thing that's important. If we break through 110, that means the yen is strengthening and the dollar is weakening, and it could increase, how can I say, aversion to risk. It could help gold and silver, and it could hurt riskier, the assets that have done well recently, like the stock market. So yeah, keep an eye on dollar yen. Keep an ear out about this meeting, Trump Xi Jinping meeting next couple of days, non-farm payroll. Keep an eye on 1260 in gold and 1850 in silver. So if you enjoyed this video, please give me a thumbs up, share it far and wide. If you haven't subscribed to my channel yet, please do. If you'd like to donate to the channel, there's some links below in the description. I'll talk to you later. Take care. Bye.